On this episode, we are talking about change of market structure. As we all understand that when market is moving in a particular direction, the market continues to break structures in that direction. And once the market changes, how do you identify that the market has really changed direction? What are the things do you see in the chart for you to say, okay, this buy market has turned to a sell market, or this sell market has turned to a buy market? And that is what we really want to discuss here. Now, if you check what I have on my screen here, the market started from here to create a new high, right? Push down to create a low, a high, a low. In this particular direction, the market is still bullish. The market continues to break structure to the upside. But here, the market now pushed to this particular high. We expect the markets to push to this particular level to go and create a new higher high. But we now notice that the market do what? Push down a little bit, which is the market pushed down a little bit and pushed up. But we notice that the market failed to take out the previous high, and that is what we call failure swing in the market. We need to understand this little concept. Failure swing. So that means the market fails to take out the previous high. And what happened? The market pushed the price to the downside, taking out the previous low. This particular previous low here is like change of market movement. So that means your change of character is just like kind of your first move against the initial trend. That means the trend has been a bullish market. The market has been going up. But at this particular junction here, because we expect the market to retrace to a particular level to go and create a new higher high, but the market fails to take out that high, and the market pushed to the downside, taking out the previous low. For the market to take out that previous low, something has happened in the market. There's a shift in the market movement. That does not mean that market cannot continue buying. Whereas at the time you are looking at the chart, that is what the chart has presented to you. That okay, now the sellers are taking a previous low, because part of our rules is once the market is going that particular direction, let the market continue to break structures to the upside in that direction. The minute the market fails to do that, then you also change. That's what we call change of market structure. And you can see here that the market continues to sell to the downside. Let's look at it from the chart point of view. We have a high, a low, a low, a high, a low. What happened? This market pushed to the downside, taking out the previous low. That is a shift in the market. Now look at the failure movement. The market now pushed to the upside, and the market failed to take out this particular high. So we call that a failure swing. So the market fails to take out the previous high, and the market pushed down and take out the previous low. Then the market continues in that particular direction to the downside. Now this looks so simple because somebody has done the homework to show us. For you to be able to master it may take you more time to do that. But I will always advise, take some time as a trader to check it out. Does it really work with me? By the time you study your chart very, you got to know that some mistakes you are making is just because you've not sat down to study your chart or the market behavior. So the advice is take some time to study the chart very well.